Tom, good to see you. Today we are going to tackle the age-old question, should I pay off my mortgage early or invest? Let's say someone has a pile of cash sitting in the bank right now. Perhaps they're invested in a money market fund earning 5%. Let's talk through whether those safe returns have changed the conventional wisdom when it comes to paying off your mortgage. And before you pay off your mortgage, you need to walk through a few things first. And the first question, Tom, would be, do you need the liquidity?
That's a pretty important question, because once you pay off that mortgage, then you're depending on your home to be your bank account, in essence. And as we've seen in the past, in the early 2000s, people have lost their home equity lines because of the way the economy had played out. There are banks like Wells Fargo that decided not to do home equity lines anymore, and so you also have to go through a process of qualifying for that home equity line, and sometimes you have to requalify.
Mhm.
So you don't necessarily have the kind of liquidity that you might think you do by paying off your home.
Mhm.
So that's a great question. It's one that people really have to think through.
Mhm. Next, of course, determine how the returns compare. You would compare the ROI of a mortgage paydown versus investing in the market. And the return on your debt paydown is pretty straightforward. It's generally going to be what your mortgage rate is. And Tom, I'm wondering, how does the equation change if I have an 8% mortgage versus a 2.5% mortgage?
I don't know if the equation really is the cost, the interest rate on your mortgage. It's more like the equation you have to think about is the volume of interest that you're paying. This
Hmm.
is something we've learned through the Nelson Nash Institute. When an analogy would be when you go to the doctor and you get a shot, it's not how quickly the doctor pushes that needle and gets that medicine into you. It's the amount of medicine that gets into you. So doing a comparison of rates isn't always quite fair. However, with that said, an 8% mortgage versus a 1% rate of return, well, that obviously makes sense. But
Hmm.
for a lot of people, they get a tax break, so some of their they get a net return, a net cost on their money, and so again, you have to look at a number of factors when doing it, and it's not always as simple as just comparing a rate.
Right. Next, of course, so when we talk about investing in the market, a lot of the time we need to consider our time horizon, or what is your life stage.
Yeah, again, for in my opinion, and I'm not the most conventional of advisors. I'm 60 years old. If I could get a 50-year mortgage, I would, um, because if I can afford to make that monthly payment, then great. But I get the emotional side of it. Especially older folks who want no debt. They want their house paid off. Look, at the end of the day, for me, in my opinion, most people, when they die, their kids are going to be selling their house. So what do I care if I have a mortgage on it or not, as long as it's affordable and it makes economic sense to have?
Hmm. And you touched on this a second ago, but it bears repeating. What are the tax implications?
Again, there's tax implications on both sides of that equation. With most people, you get a tax break or a tax deduction on the interest. So you really have to look at that net cost of borrowing. On the flip side, depending on what you're investing in, if you're just putting that excess money in, say, an index S&P 500 index fund, well, there's tax implications to that. So maybe you want to look at different strategies, perhaps an annuity, cash value life insurance, something along those lines, where you're actually getting a tax break and compounding interest to reutilize or redirect those funds.
Right. And last, of course, you touched on this as well. Will paying off your mortgage bring peace of mind? I mean, the spreadsheet can say one thing, Tom, but sleeping at night is another thing.
Absolutely. So if paying it off lets you sleep at night, then that's the right decision for you. I tell people all the time, and we talk about this, there's no right or wrong. There's no good or bad. It's what lets you sleep at night. And again, it's your money. It's your retirement. It's your life savings. So if that is what gives you the peace of mind that you're talking about, then by all means do it.
All right, Tom. Again, I'm glad that we got to talk through this because I think a lot of people are crunching the numbers right now. If they want to do this with you and talk through the emotional implications as well, how can they reach you?
Uh, give us a call, 973-394-0623. Email TJ O'Connell, OCONNELL, @internationalfinancial.com.
All right. Tom, thank you very much.
Thanks, Erin.